one of the key examinable areas about audit is the accounting systems and internal controls. So we want to look at that, and then we proceed with the next ones we may have. All right. So accounting systems and internal controls. There are some of the items I will touch on it just briefly, because I believe you would already have had a good understanding of that system in the past. Okay. So what are we looking at over here? We're looking at the need for keeping good accounting systems and what are the key components of an internal control system. Sorry. Understand the basic principles of internal controls and list the internal controls within an accounting system. And then the SOAP spam, I've highlighted it in red with asterisk, which means you got to read about that. Or on the basis that you already have some good understanding of the SOAP spam. Now, key items we look at for control systems here is the purchases, payroll, and revenue. Purchases goes with payables. Payroll will have to do with cash and bank, you know. And then revenue deals with what? Receivables. So knowing this helps you to understand, it's like a flip side of a coin, helps you to understand the control systems that are pertain to any of them. So you test the controls, and if they don't work, you flag it out in your management letter. Now, internal control environment talks about the control and internal control systems, procedures, and activities. When we talk of test of controls, you are testing whether these internal controls are working well, the procedures are working well. In the past, we used to call it the compliance test. Then the poorer the internal control system, if the control testing flags out that is not effective, you do a lot of substantive tests. It's more detailed testing of the balances, including analytical reviews. So analytical reviews are done at the planning, during and after the audit process, okay? Audit evidence, the information used by the auditor to draw a conclusion, to draw an opinion. Audit risk, the risk that will give a wrong opinion, a misleading opinion. And then assertions are the statements which the management have made. So here, management assertions. The management have made some assertions, some comments about the validity of recording of transactions, balances, and disclosures. So we are going to test the assertion. They said revenue is accurate, test it. PPE is complete, test it. So you're testing the completeness, the accuracy, the existence, the rights and obligations. All right. Now, what are we going to audit? We are going to audit accounting systems. There are accounting records. It is a system of accounting which brings about these numbers you are going to audit, okay, or the narratives you are going to audit. So all organizations, depending on their size, have accounting systems. It helps them to control their finance, to prepare their budgets, to run their day-to-day accounts, payables, receivables, to ensure assets are safeguarded, properly recorded, to ensure that the financial statements can be prepared if adequate accounting records exist, to ensure that they comply with statutes, with laws, with the Companies Act, to keep proper records for audit, for PAYE, pay as you earn, tax purposes, national insurance, VAT, statutory pay and statutory maternity pay. These are items which come out from the accounting systems, right? We have the CRIME. You may have heard of CRIME, which is the 5 components of internal control. C being the control environment, R being the risk assessment processes, I being the ICT, information communication technology, M being monitoring of these controls, and E being existing control activities. So typically you will find this internal control environment sitting at the top. Okay, so then you have the risk management processes flowing from it. Control environment is a culture at the top, phone at the top. And then underneath the risk management, you get the monitoring, control procedures, control activities. All right. The auditor. must understand the client, the environment in which it operates, so that you can be able to assess the risk of material misstatement. In doing this, you must do what? Plan the audit effectively. How do you plan it? Understand the control environment, the control that they have. Consider factors that will affect risk. Okay, so remember we have the control environment, understand that control environment. Which factors will affect the risk of potential misstatement? Then, based on this, if you understand this, you can now design your work, determine the extent of work you'll be doing, the timing of your audits, so that you end up doing what? Providing a very good conclusive opinion or conclusion. All right. Purchases. We mentioned those areas. What are the control objectives of our purchases? To ensure that everything we have purchased have been authorized by somebody. I don't wake up and just go and purchase something. It must be authorized. To ensure that only the necessary items are purchased. I don't go and purchase anything at all. Those which are necessary for running a business. And that the value we have obtained, that ensure that value is received for liabilities incurred. You're going to pay something. Are you getting the right value for what you are paying for? Now ensure that all expenditure is included in the accounting records. All expenditure. Once we purchase, it leads to some expenditure. They are included. And to ensure that expenditures included are accurately stated. So you can see some management assertions there. Accuracy. Everything included. Completeness. Value is received. Valuation. Only necessary ones are procured. Existence comes in there, right? And you can see that they are authorized. What are the controls? Approval and authorization. This comes under the SOAP/SPAM, one of the A, okay? So examples include like requisition notes are authorized, authority limits are established. If I can only authorize 10,000, I don't go and authorize 20,000. Major items should be authorized by the board of directors. So it means we have delegated authority limits. In terms of what do I mean by that? If it's 10,000, up to 10,000, CEO can sign. More than 10,000, board should sign. So I don't go and sign things which are outside my limits, my remit. All goods should be checked for quantity and quality, and good received notes should be raised. And then invoices should be signed as approved. So these are some of the controls. So you go and test and check. Have these been authorized? Have these been approved? Okay, is it within the authority limits? If not, you flag it out. There are also physical controls over. So again, one of the P, SOAP/SPAM, one of the P in the SOAP/SPAM. Physical controls. Orders are recorded on official documents. Copy of the orders should be retained for follow-up, when you order a good or you order some services. Now, the defined goods invoice sender should deal with any goods we receive. Any goods we receive, then purchases invoices should be stamped with an approval grade that we have received it. And purchases invoice should be sequentially pre-numbered. So you move from AA001 to AA002 to AA003 for tracking and monitoring. Arithmetic controls, the second A in the SOAP/SPAM. So like check the invoices against orders and goods received notes. So this is what we call the three-way match. The invoice, the order, the goods received note. In fact, to the receipts also you must check. Check goods have been returned when we purchase and it's not good, we don't like it, and we return it. They should issue us with a credit note. Check whether there's a credit note for any items we've returned. Check calculation of the invoices, the part they are calculating, the quantity times the unit price. Is it correct? Check. Then we have segregation of controls, segregation controls, which is one of the SOAP/SPAM, one of the S. Now, nominal ledger coding should be done independently by somebody. Purchases ledger should also be kept by persons independent of receiving the goods, so that one person does not have so much power receiving, recording, calculating, he can defraud the system. Procurement is a high-risk area, honestly. Purchases ledger control should be maintained and checked again independently. So these are segregation controls. Now, the O, organization control. So the O. So reorder levels and quantities should be preset. So this comes into under the economic order quantity, at what level should we reorder? Identified goods invoice centers should deal with receipt of goods. This is also organization control, right? And then the GRN should be checked against purchase orders. We ordered for 15 units. The GRN shows 15 units. You reconcile it. Okay. Come to revenue. We're going to deal with these. Then we'll go to cash as well. Okay. What's the control objectives over revenue? We are selling. So first objective will be to sales to customers are made in accordance with company objectives. Don't just sell at all. Make sure you sell based on the objectives and the processes of the company. Customer orders are authorized, controlled, and recorded, and they are completed promptly and timely, fully. Now, goods and services supplied are invoiced. Once we supply, we invoice the customer to pay. Goods returned and claims are recorded. So we sell, somebody returns it, we record it. We issue the person with a credit note, or we are yet to issue a credit note, okay? To ensure that all sales revenues are included in the accounting records accurately. So like I initially indicated, any sales you made should be correctly recorded, and all sales are paid for to minimize losses through bad debt. We sell to you on credit, we follow up to ensure that you pay. So these are control of objectives over revenue. And you can see this just like a flip of the purchases control objectives. So if you know one, you can know the other. Put yourself in the shoes of the company and you get it. What are some of the control of activities for revenue? Sales orders received, check. Numerical sequencing of orders, sequentially pre-numbered. Check that there's approval from the credit controllers over any sales orders. Okay, check order details to copy dispatch notes. So the order we received and what we are dispatching, match it. When sales are dispatched, the copy of the dispatch note, we want to be sure that the customer has received it to prove that the customer signed for it. Again, check numerical sequencing of delivery notes. That should be numerically sequentially pre-numbered, right? Check dispatch note details to the copy of the sales invoice. Because I want, again, three-way matching what we are delivering to what the customer has ordered and to the invoice we have issued. What if when invoices are sent, sales invoices are sent, do independent calculation of the invoice to be sure we are billing him for the right amount. Details are agreed to the customer's order, check that one. Details are agreed to copy dispatch note, check it. Check sequential pre-numbering of invoices again. So you can see everything is sequentially pre-numbered, right? Sales invoices listed in the sales daybook or journal. Have we entered every invoice in the daybook, in the journal? Look at the batch totals, processing controls, check that one. Also check sequential pre-numbering of invoices are entered. Don't enter invoice 0010 before you come and enter invoice 008. Enter them sequentially for tracking purposes, okay? Individual sales journal entries posted to receivables. Once we sell and the person has not paid, it leads to a receivable. The person owes. Now, individual posting from journal to individual receivable ledger should be confirmed that we've posted correctly. Now, monthly total of sales journal posted to control account. Check for monthly posting of journals have been posted correctly the nominal ledger or to the debtors account, and do a periodic reconciliation of the control accounts to check the total of the debtors ledger balances. We also want to send monthly statement to customers. Check whether they received the statements and they agreed or they disputed it, and did the company follow up. Now, once we have billed them, they pay us. If they give us money, whether cash or check, check whether receipts have been posted to the receivables ledger and do a reconciliation, control account reconciliation. In fact, check the cash book as well or the bank statement to see if payment has been received from the customer. Payroll, what are the control objectives? We don't want to pay somebody for no work done. So the first thing is to ensure that authorized work is paid for. In fact, we pay you for work you've done, authorized work. We also want to pay the correct employees, not somebody who didn't work. We also want to ensure that payments made represent value received for authorized work. If the person did 10 hours, we are paying him 10 hours. To also ensure that payroll costs are completely and accurately recorded in the financial statement, we post them, staff costs. Okay. What about the payment? No, staff cost comes with national insurance, income tax. Check that these have been deducted and calculated and paid on time. Internal controls over payroll. There's segregation. One person shouldn't do everything, right? So wages and salaries department should be separate from the receipts or payments function, totally different. So you may have payroll doing that. Okay. Apart from the treasury or finance department doing the payments and receipts, right? Duties of wages staff should be rotated. At a point in time, change this guy. If this guy was doing overtime, he should move into maybe just entering data, and this person is on payroll taxes, move him to NI, rotate them. Now, control of access to master file records should be restricted. One person shouldn't have access to the master file. Somebody without key duties in all of these, usually senior officials, should be the one having access to this. Physical controls. People come in, they clock in and they clock out. Check whether employees are clocking in correctly and they are clocking out correctly, or somebody is clocking for a friend who is not at work. So supervise this clocking in. Authorization and approval controls. Written authorization to employ people and to dismiss people. So we'll check, are there any written authorization that we've hired employee A, or we have dismissed employee B, or we have increased the hourly rate from 12 to 15. Check that one. Anyone works overtime, check whether we authorize for him to work overtime. Now, an independent official should check the payroll and sign it. Someone who is not involved in the preparation of the payroll, independently must check and sign. Employees should sign for their wages. If they are paid for in cash, give them something to sign for so that we can match it. It is minimal now. Now people hardly take cash. You pay them through bank transfer. Now, credit transfer should carry 2 signatures. When we transfer into the person's account, 2 signatures will do. Also do an arithmetic and accounting accuracy calculation. Sample some of the payroll items, do a rough check calculation, check whether they paid them the right amount, they deducted the right taxes, and the correct NI has been calculated. In fact, today we have softwares who do this for you, so it's quite easy, but do a sample check. Do a sample check. Systems can be wrong. IT systems can have failures, okay? Control account should be maintained. Okay, check for control account as well. Personnel controls, the P, another soap spam, one of the P. So look out for, so one is personnel, one is physical, okay? Now, another soap spam, one of the P is personnel, one is the physical, okay? Now, a wages supervisor should be appointed to supervise the staff so that be sure who comes to work and who doesn't come to work. Then we have the management controls. So overall checks to highlight major discrepancies. We budgeted to pay 10,000 this month, we've paid 12,000. Check the actual against the budgeted. You must also work to undertake some analytical review of payroll costs. And you may integrate this with the costing system, right? What about cash received? Cash received, there will be controls over cash received. Maybe they sent it by post. This mail must not be opened by one person. If it was by post, 2 people must open it so that there will be a witness. Any incoming checks we have received must be logged into what we call the log book, and the page must be signed off. And then this book must be retained outside of the cashier's department. Controls over cash received by Salesforce. So the salespeople go out and they bring cash. There should be duplicate receipts, not one, so that we can always cross-match the original against the duplicate. What if we sell for cash? We sell and they give us cash. Once we receive the cash, give receipts. But it should be what? Non-carbon copies. I mean, duplicate receipts. Now, whatever you get, there will be a row, the till row when you buy from the counter, the till row will show, but there will always be a way we can check this till row. And if it is a end of point sales, the electronic point of sale, the tapping, you must be able to check whether it is working effectively and it is not being directed to someone's pocket. Cash collections at retail, sales with rank in amount visible to customers. So the customer sees that, well, this is how much I'm going to be paying. So he sees it, and that we can also track as well. If the products are priced at a particular amount, it forces operators to give change. So you must always ensure we pay them, we return them their changes which is due them. Watch for voids, watch for any no sales. So you must look out for these controls as well, watching for voids and no sales. All right. So this is a typical Tenbo report with corporate governance. Let's see what it says. The company system of internal control has a key role in the management of risk that are significant to the fulfillment of its objectives. A sound system of control, internal control, contributes to safeguarding the shareholders' investments and the company's assets. Internal control facilitates the effectiveness and efficiency of operations, and it helps to ensure the reliability of external and internal reporting and assist compliance with laws and regulation. Now, effective financial controls, including the maintenance of proper accounting records, are an important element of internal control. They help to ensure that the company is not unnecessarily exposed to avoidable financial risk, and that financial information used within the business and for publication is reliable. They also contribute to safeguarding of assets, including the prevention and detection of fraud. Important. You see how important key internal controls help with keeping the company on track and being sufficient. Now, these are example of internal control systems. I think we started with this one, the crime, the 5 components, okay? The control environment, risk, management, activities, procedures, and the monitoring evaluation. So I think henceforth, from this side onwards, you see diagrams detailing some of the information on when it comes to control activities. So this like in a specific area of a business, and this can see purely has to do with invoice and purchases and how it flows from one place to the other until it results in a financial statement and the kind of controls you would want to put in place. Again, this one, payroll controls with the flow charts showing how the controls work. And then the revenue system, yes. So it talks of the sales system and the controls, and now it results in the receivables ledger and then in the final accounts. All right, then we have some good questions here. And these are typical questions. These are kind of typical questions you see where you'll be given a control environment and the weaknesses are given, and you have to identify the deficiency and the consequence of the deficiency on the company. And you recommend a solution, and then you test the control. Now, if you know the cause of the issue, you can easily test it, right? Okay, that's it, good. So we will end here, and then we'll catch up again in the next session. See you soon, bye.